Hello everyone, welcome back to another post-market analysis video. So this is for the Thursday 26th of September 2024 and this analysis is for the micro E-mini NASDAQ index futures. So let's see what we have today. So we recommend for you to have a look at the pre-market analysis for this day. Just before you look at this video, it's a short quick pre-market analysis, so you will get a clear idea of how the market played. So the pre-market, and then come back and look at this video for the post-market analysis. You could see in the pre-market analysis video we talked about this high impact news, couple of high impact news, and the market will be getting a bit of a volatility. Price runs due to this high impact news. So in the pre-market analysis we discussed that the weekly bias is bullish, the daily bias is also to be bullish. The reasons, have a look at the pre-market analysis video for the reason of that. So we were looking for bullish entries on this day, and you could see now in the post-market analysis you could see the price has formed a bullish candle at the end of the day. So the bullish bias has been maintained in the daily. So what we discussed has played out for the daily. So then we discussed that in the pre-market analysis we discussed that the 1 hour price being too stretched at the start of the New York session, more towards around 9:30. So the price was stretched. So we said, like, because the price is stretched, we were expecting the price to come down for a fib retracement. That was discussed in the pre-market analysis. So we said that we are expecting this price leg to bounce a bit and come into the 50 at least to the discount levels. So you can see the price has worked accordingly, like the price has reached the discount, because we said even though we were bullish, we said that it's not a good idea to buy in this area because the price was at a premium in compared to this price rally. So we were expecting the price to receive a discount, and you could see the price has received a discount around New York time 10 o'clock. Around, if you look at the time, New York 10 a.m. the price has reached the discount levels of fib 79, and then you could see the price has respected the fib 79%. This is the hourly chart, and you could see the price has started going up. Then the question is, did we take a trade? Because we were expecting to take a bullish entry, right? So let's go and look at the 15-minute chart to see what we have done. So let's get into the 15-minute chart and let's analyze to see what the price did in 15 minutes. So you can see in the 15-minute, in this price leg where the price came up, then around 9:15, 9:30 the price has started coming down, which is good, which we were expecting. Then when the price reached the 79 level, like a discount level, then there was a possibility for us to buy. So the question is, did we buy, right? So what else are we looking if we are to buy? One thing is, we are looking for the price to be below the midnight open. So you can see this line over here, which I'm pointing over here, that was the New York midnight opening price. So for us to buy, it's ideal price should be below that. So yes, the price reached below that. So the price is at a discount level. Also price is below the midnight, New York midnight, which is the power of 3 concept. Have a look at the other videos in the channel for you to understand those concepts like power of 3 and any term we are talking here. If you are not clear, you can expect some videos explaining those concepts in the very near future. So please keep subscribed and click the notification and the bell icon, so when we explain those theory concepts like power of 3 order blocks and all, you will be notified and you can learn about those as well, which will help you to understand this analysis. So then power of 3 concept has played, that is fine. You could see that we'll go into the daily chart in a while, but then did we take the entry? So yeah, so but then what we noticed was, yeah, the power of 3 is fine, but then the market has started to push up. But the question is, was there any displacement? Because we need to see a huge displacement if we are to buy in this area, a huge displacement, plus we need to see internal market structure shift. So do we see an internal market structure shift? Once again, if you are not sure what is the internal market structure shift, expect videos to be released explaining those concepts in the very near future. So there is no, we can't see an internal market structure shift here, because there should be an internal swing high to be broken towards up for it to be an internal market structure shift. So we don't see internal market structure shift in the 15-minute chart, which means we don't see a trade entry in the 15-minute chart. Not only that, we can see in the pre-market analysis video, we explained that there is a possibility of smart money being selling from here. So it looks that the smart money selling has worked due to grabbing the buy side liquidity over here. And when the smart money selling has happened, it has happened with huge displacement. So there were no, like for example, there were no smooth price run coming down over here, which would have left us buy side liquidity for us to go above. But we don't see that price here, price action here. Instead of that, we see a straight price being delivered, sell side delivery, we see straight. Okay, so let me delete this. 1 second. Right, so then once again, to continue what we were talking, so we see a straight sell side delivery, price delivery. So we don't see that smooth run down, which means the selling, smart money selling is very powerful. So that makes us a bit hesitant. We have to think twice if we are to take a trade, because smart money selling was very powerful. So you could see that is right, because you could see even later on the day, the price, even though price went up, it's not strongly rallying up. You can see it's a very lethargic price move towards the up. You can see somewhat a price up here, but as I said, no internal market structure shift. So we can see the price being pushed down from here to the upside, forming some candlesticks, hammers and all. But we are not convinced, like we are not sure to take a trade from here, because this is a game of probability. Trading is not all about winning. In trading, you could win some entries or you could lose some entries. That you can't control. What you are trying to do as a trader is to look into the facts, what you see, and try to make a probabilistic judgment. So probabilistic judgment means your judgment may pass or fail, may be right or wrong. But what we are trying to do is we are trying to find as many as facts to see if the probability would increase if we take this trade for us to win. That is what we are explaining in this pre-market and post-market analysis series for you for education purposes. So you could see that we don't see that probability, high probability entry in the 15 minute. So let's go to the 5 minutes and see if we see anything over there in the 5 minutes chart. So let's go to the 5 minutes chart. So you could see this is that price run in the 5 minutes chart. Huge displacement to the downside. Okay, so if we draw over here, Now this is for education purposes only, keep in mind. So there was displacement, there is a, as you can see, there is a internal market structure shift down because this swing law has been broken. So you could see the smart money selling has happened, bringing price all the way down, but we were not interested of that selling. In fact, we don't see a trade entry here as well, because we don't see a retracement here for us to take a trade anyhow. Our daily bias was bullish, so we were not very interested of taking a trade down, like a bearish trade. We were looking for bullish entries in the discount levels over here. Now in the 5 minutes, do we see any internal market structure shift? Yes, we can see one here. So when the price come all the way down, right, when the price came all the way down from here to here, but it's a very strong price move, so it was not a smooth price run down, like there were no retracements. Uh, it was a very strong price move down, so that is a concern for us, because if instead of this, if the price came, let me show you, if the price came like this, when it came down, if the price came like this, having this kind of a price action, and if that happened, right, something like this, if this happened, what happened here, and then over here when the price goes up, this is what ideally we were looking for. Then this point breaking above here is internal market structure shift, let's say with some displacement, but it didn't happen, as you can see. Like hypothetically, we are showing you, this is the ideal case. If this happened, and then what we would have looking for was then for the price to again come into, let's say, a price imbalance, like a fair value gap, order block, some sort of a pricing fair value gap, for example, or a PD array, like a discount PD array. So what are discount PD arrays? Subscribe to the channel and click the bell icon. You will see when we release those education videos for you to understand what are those soon. So if price came to a PD array, then we would have taken a trade expecting the price to clear these buy side liquidity pools seen here. In a situation like this, we call it as a low resistance liquidity run, and would have expected the price to go higher. But as you can see, this price action was not seen in yesterday, like today during the market basically. So in the New York AM session. So because we did not see this price action, we did not take a trade here. This is for education purposes only. This is not investment advice. So for education purposes, you understand why we did not take that trade. It's true. So if you took a trade here, you would have ended up in a losing trade, as you can see here. So if, for example, if you took a trade here, let's say you put your stops somewhere down, like based on, hypothetically I'm showing, you could, let's say we put it down here, then it's not a losing trade. But what I'm telling is hypothetical, just to give you the idea. If you place a stop loss and if you're expecting something like this to happen, it is going to be a losing trade. Then you might say, no, if the stop loss was placed down, it's not a losing trade. Yeah, it is not a losing trade. But however, you can see the price run was not smooth. Another reason why the price run is not very smooth is, you can see this is, let's look at the time, 1 o'clock. So this is the New York PM session. One could have expected trade to take, if you are to take a trade, normally you would take a trade in the New York PM session, let's say at around 1:30, this purple color box. So we have to wait for the price to wait until the price comes to the New York PM session for us to take a trade, not around here. We don't take a trade in the lunch time, New York lunch time. This area is the New York lunch time. So anyhow you don't take a trade. So if you were taking a trade, it will be somewhere in the New York PM session. But then again, you look at the price action, and still you can see the price run is not very strong and smooth. Now if you hear what we talk is a bit overwhelming, and if you can't understand most of these concepts, don't worry. We will release education videos very soon in this channel for you to understand what we talk. So then you can learn more about this for education purposes about trading. So now you understand that there was no trade entry in the New York session based on the concepts, ICT concepts we discussed here. But another thing, if you look at SMT divergence, you could see in the Dow Jones, it has formed a lower high over here. From here to here, it has formed a lower high. But you can see in the NASDAQ, it has formed a higher high. So when this forms a lower high and when this forms a higher high, what this means is it's a SMP divergence. So what this means is NASDAQ, the price is not forming a higher high because the price is weak, or in other words, the price is not strong to go high. That's what the NASDAQ is telling. Like it's not price is unable to go high, right? Which means the price is not strong. Now, at the same time, when you see the this is the Dow Jones, when the NASDAQ forms a higher high, what it could imply is that the smart money is building up positions here, the smart money traders. So the smart money, you could see it has worked, because why the NASDAQ has formed a higher high is from here to here. So as I said, it's building up positions to push the price down, right? So that is what happened in the 15-minute chart. If you look here, carefully, if I take this away, so this price run down is that what we explained here. This is that price run, this one. So this is a 15-minute chart again. So you could see that SMT divergence also has supported the price to go down, push down, right? Because smart money building up, accumulating position, building up positions, right? And then pushing the price down, and this is the S&P 500. Now that S&P divergence also shows the price to go down. However, our original bias, daily bias, was to go up, meaning what we tell here is, okay, so if you are confused of what I'm telling, yeah, it's true, the price came down. Then if you ask, could we take a could I take a trade here? Yes, if there are some traders who short here. That depends on your style of trading. So if you were a scalper, if you were not worried about, let's say, the daily buyers, you would have taken a scalping entry where to take the price down, and you would have make profitable. Like what I mean is, you would have hypothetically taken a position like this, and end up in a winning trade, right? But then what I was telling was not this trade. So if I just move this slightly here, what I was talking is to take a trade, let's say hypothetically from here, and to go up. Why is it? That depends on the daily bias. So which trade is better, this one or this one? Of course, this looks better because it's look like a winning trade. This looks like comparatively it doesn't look a good trade because the price, yes, it was. This is not a good trade, that because we don't see price action for us to go bullish. Here we see a trade which it's been bearish. But the point is this: in the same days, during a time window, some traders can go short, bearish. Some traders can go long, bullish. It depends on how you analyze the market. Then you might say, well, this is better. Why this was not focused? Yeah, this is just an example, like on the day. this could have been reversed on another day. So that is the important point you have to understand. This, yes, it worked, but it was just for this. You can't expect this to happen every day. Like on another day, instead of the price coming down from here, the price could have come down a little bit. Let's say sweep the sell side liquidity down the London, for example, and the price could have moved up instead of going down. So the point is, this is in hindsight, yes, it worked, but in reality, in real trading, this might go the other side, the price might go the other side. So that is what we are trying to educate you. This is for education purpose only, not investment advice. We're trying to educate you how to read the market, how to read the price action. If you are good in reading price action, in long run, you may lose some of these some of the trades like this, which are, if you are to take trades in all directions, it's like it becomes gambling. So we should not look at trading as gambling. We should look at trading as a systematic approach, where we should look at trading to make probabilistic decisions and judgments based on facts and long-term market kind of what you call behavior, right? So in summary, you can't be overwhelmed, you can't be happy or sad telling, oh, I missed this trade, oh, I was waiting for this to happen, oh, but it didn't work, so am I wrong? Why, like, why isn't it, this is the, no, the answer for that is, it's not that you were wrong here, it's that this was just a price action for just one day, right? And on that day we were expecting a bullish bias, but it didn't work. Is that the reason always? No, not really. As I explained, if the price was coming down, as mentioned, if the price was coming down in this price action, for example, as mentioned earlier, and then if it formed, for example, let's say market structure shift over here, and then if there was a imbalance like a fair value gap, then you could have taken an entry, and if the bullishness was strong, you could have received the same outcome like a winning trade towards the higher side, right? Once again, if I was telling complex stuff, don't worry, stay tuned for simple education videos explaining all the concepts I was talking here. We will be releasing them very soon for you guys, for education purpose. So this summarized the post-market analysis plus a sort of a understanding of price action, and how to see successful traders read the markets. So keep in mind, trading is, we need to look at trading as a business, as a long-term gain, like to make gains over consistently over a time period. Not, we can't make judgments based on one or two trades. So that is the whole purpose of this channel, to make you educated, so that, again, not as investment advice but as education to read price action and to understand the markets. So stay tuned until we see you on another video. So expect videos in this nature. Let me show it to you. So every day we will be releasing a pre-market analysis just before the New York 9:38 start, and then we will be having live sessions, like live trade sessions for our team, right? And then we will be having post-market analysis. Let me show that too as well.